Hi guys, this is Simon with Trade and Perform Coaching doing the trade review for Wednesday the 17th of September. So it was a Fed day, and coming into the day we had a couple of things. If you'll look where I posted, tonight I'm going to review the SPY chart, the NQ chart, and the ES chart in very basic terms. The idea of what I'm doing here is a little bit different than what I do in the room. The idea here is going to be a basic idea of how to structure a day and how to use these zones appropriately to help you in your trading and help you gain an edge. Now, my primary focus today coming in, as I said, was having a long side bias from rotations lower. Very simple. A couple of things with trading, whether you're trading the spiders, the NQ, or the ES, there's two different types of trading, I heard a trading psychologist put this the best, but she said most retail traders come in and they're looking for action because they're under this impression that they have to trade every day and get a lot of trades every day, and they want to get rich, right? Professional traders come in and they say, let me see how the market will set me up and how I can make a lot of money. It sounds very, if the opportunity presents itself. Now, that sounds like you're saying the same thing, but it's not. Those are very subtle differences there. Okay, one says I can't stand to sit still. I've got to find an opportunity, and I've got to predict and figure out every single move. The other one says I know exactly what my money shots are, and I'm going to wait for the market to set it up and take it. And that's the difference between a trader who's in a boom bust cycle. One day makes a lot of money, the next day loses a lot of money, and a trader who is on a consistent upswing in his P&L. And I'm going to talk about that just a little bit tonight while trying to keep it brief. So today we came in. It was very important. We were coming in the heels of yesterday, and in the live market preview I pointed out, and I'm saying now, there was very few sellers on Tuesday in ES, and buyers were clearly in control. Okay, the bias was to look for long side trade opportunities from rotations down. So how did that pan out if you were a trader? Well, first of all, we had muted action in front of the Fed. That was to be expected. But if you looked at how this day panned out, we opened up, we gave a small push higher. We came in for gap fill. Upon gap fill, they tried. So the gap fill simply means that they closed the window from where we closed the prior day, and we got a responsive buy, a small responsive buy, but it was responsive buy worth in the spiders 20 cents. Now, there's a difference between trading the spiders and the futures. Spiders are attractive for those people who want a little bit less volatility, but particularly a product that trades in a less leveraged fashion, and with at least in dollar terms, a little bit less speed and less. Well, it just doesn't seem like your P&L goes up and down quite so quickly with the leverage that you have in futures. Futures actually trade differently than the ETFs do because of their leverage nature. They're a little more nervous, and because of the leverage, that nervousness gets expanded into wider ranges on the P&L that you don't necessarily see or not that overwhelmingly obvious within the ETF itself. So that being said, if I was trading the ETF today with the idea of I'm looking for rotations lower for a move higher at support and resistance, well, if you look at this first move down, right, we came through a lot of chop. Okay, the way the zones work, if you're new, is the first time to the zone, I expect a rotation back up and a tradable move back to the upside. Now, in spiders, that would be usually closer to somewhere between 20 and 40 cents worth of move is what I'd be looking for. To put that in dollar terms, if you're trading 1,000 spiders or 1,000 SPY, you're looking at approximately $300 to $400 in profit, right? And then just cut your size from there. But that, at least, that's the concept behind the spiders and me publishing this. You know, even if you're trading smaller size, right? Getting good trade location makes all the difference, and understanding what the bias is makes all the difference in being able to put a good trade on. Now, the other thing I want to point out is today was FOMC day. FOMC is a wild card. I always remind people about this. You have very little control over the volatility here. So if you focus your trades prior to FOMC, the first time we came into the zone right here, gave a beautiful rotation from essentially $200.30 all the way up to right before the number was released. We made it all the way up to $200.72. That is a good move. It gave you a low risk entry, and it was the first move into the zone, and you took little to no heat. So in my book, that's exactly what you're trying to accomplish on a day like today, is to get that prime location with relatively a reduced amount of risk, right? You've already taken the rotation down, right? And you've given yourself an opportunity to have an upside move. Now, post FOMC, if you'll look, even there, the support resistance zones played out perfectly. We rotated up right into, obviously the initial news created extreme volatility both up and down, but if you look, once things settled down, we finally rolled right up into resistance. Out of resistance, we had profit taking, and where did the profit taking come? Right into the support zone right below. So I don't know if I've done a great job explaining the SPY strategy and how to use it, other than to say the objective is to look for the first touch of the zones, and at the first touch of the zones, we're looking for a counter rotation in the opposite direction, right? That is tradable. And my guess is, I'm still playing with this on the spiders. It's been a long time since I've traded the spiders. Of anywhere from 15 to 20 cents would be my initial target, and then start trailing up from there. Now, let's translate this, how it looked, over into the futures market really quick, and go with the exact same concepts, but just looking how the futures traded. On the futures for today, here's the ES 5-minute chart. You can see it's a bit more detailed, right? We first rotated up. There's a few more resistance zones because the P&L available in ES is significantly higher in the futures than it is in the spiders. So you can see we opened in and above Tuesday's high. We failed to close the gap or the half gap. That's my first measure early in the morning of whether there's strength or lack of strength. So with the inability to close the half gap or the gap, we rotated right up into the 1996.50, 1998.50 resistance zone. You can see we traveled and took one tick of heat into the zone before it rotated over, came down. Now this is the second move into this zone. You can see that we sat here and consolidated for over 25 minutes, right? Then we proceeded to break and push down to support the zone below, just like the spiders. And then we rotated up from this location up to 1994, which is essentially 1989 to 1994 per contract. That's $250 per contract potential in P&L. So the objective coming into the day was to focus on long side setups. I was hoping to get a long side setup after the econ news. Nothing really, it moved so fast that I really couldn't get set up. And for obvious reasons, excuse me, I did not want to fade this move to the upside, even though the zones, if you'll notice on first touch, rejected exactly as planned, right? And you'll see that the zones at support provided a pause and counter rotations back up at each step of the way, right? Including down here, we got a counter rotation back up. So the concept behind the zones is very, very important. And the concept is that there's structure there in the market. And that structure leads to the market taking a pause, right? And that pause is all we're asking for. The counter rotation back up for a profit opportunity, that's the bonus. What I'm looking for in these zones is a chance to get into the trade with a relatively low amount of risk, enough time to see if I can get a counter trade back up, and if I can't, get out with a minimal loss. The third component that's very important is behind the zones, I already have a preset stop. And in this case, in the ES futures, my stop is usually 2 points behind the zone. Now, I want to speak to this for a second. One of the reasons I don't like trading FOMC is because you end up having what's called OTF or other time frame players come out and play. And when OTF comes out and plays, they really don't have a respect for, they don't care about, it's not a matter of respect, they don't care about support resistance zones. They're simply shoving huge amounts of volume through the market very quickly. And in addition to those players trying to jam a lot of volume through the market very quickly, you also have other players that would normally be there withdrawing their liquidity because they would want to wait to see what happens. The result of that is you get massive fluctuation. As you can see, we ran from basically 1999, right, and we took a move all the way down to 1984. It's a 15-point rotation down in 5 minutes, and then over the next 10 minutes, we came all the way back up. That's 15 down, 15 up. Think about that in terms of P&L. That's $750 a contract, right, that you're trading. That's an enormous amount of risk in an environment that's very difficult to get right, okay? Once things settled down, the market started trading what I would call properly. We rotated down to the top of the zones. The zone held. We rotated back up. We've already tested this zone once. We tested through. We came to this 2074 to 2002 support resistance zone. There's this was the top and a double top, and it provided resistance and gave us a rotation lower. And while I did not take the short, it certainly, because of the environment we were in, it certainly is reassuring to know that those zones are still providing good entries for support and resistance. And this is one point that I hit upon a lot. There's a difference between being able to set up charts properly and being able to take charts properly. Right now, with overall buyers being in control, my focus is on long side trades because those upside movements are simply easier, they take less time, and they're less stressful. And I'm all about managing my 3 points of capital, my actual P&L capital in my account, my psychological capital, and then my last one is my emotional capital, which are separate. I have to have enough psychological bandwidth to be able to process quickly. I have to have the emotional ability to withstand the discomfort of being in a trade that might be rolling against me or feeling threatened that my stop might get hit, right? I need to be able to respect my stop and not move it, okay? And all of these features or functions add up to becoming a disciplined trader. And when you put them all together in a structured package, you end up with an ability to start avoiding boom-bust cycles and starting to build structure day by day and building upon each part of your trading plan so that not only you gain confidence and belief in yourself, but you also don't have the emotional letdown of seeing your P&L go way up and then watch it sink way down, which can just be heartbreaking if you get it wrong. It's not easy to do it by yourself. Let's go look at NQ really quick. This was NQ's chart today. You'll see I highlighted in orange when I release these to the members in the morning, or in this case the evening, right? I highlight on the chart where the high odds points of reversals are. The orange and the red highlight the high odds reversal points. And as you can see, even if you didn't waste time, first of all, the focus was on the long side. You can see we came right down to that 40, 50, 50 trade location, and we found responsive buyers on NQ. Even if you completely ignored the short side trade, which again, the zone acted perfectly, gave a rotation down, right? You still got good long location for a trade to the upside. And again, I'm not always trying to capture, this is prior to FOMC, you know, if I can capture from 40, 50, 50 all the way up to 40, 61, that's an 11-point move, guys. That's $220 a contract. It's a lot of money. It's a good trade, right? The last piece I want to show is at the high odds location, you can see that we rejected right out of it, and we rotated down for almost 20 points to the downside, or $400 a contract. So there's a big value to knowing where your trade location and where your high odds and low odds trade locations are. Anyone, I believe, can learn how to trade, but you got to have three components. First of all, you have to have an actual trade plan with an edge. Secondly, you have to have a mental component built into your trading plan, and you have to have that trading plan written down with rules designed to extract money from the edge. It's not enough just to have the edge. You got to have the structure around the edge to pull the money out. And then the last piece is you've got to take care of yourself and help yourself in terms of building a solid trade plan that'll keep you going from boom bust. Most retail traders lack that plan, and they end up going from big booms to big bust to big booms to big bust, elation to deflation. It's an awful cycle to be in. I empathize with people who are there, and I encourage you that you take every step possible, starting with a couple of books. Mark Douglas Trading the Zone, and any of Dr. Brett Steenbarger's books. Fantastic books, and they'll all help guide you. The starting place is, A, verify that you have an edge. Like, I know that I have an edge in my zones, right? And number two, a trade plan to extract the money from that edge. Anyways, my name is Simon. I'm with Trade and Perform Coaching. If anyone would like, every morning I run a live market preview. I spend anywhere from 20 to 30 minutes setting up the trade day, explaining in detail where I'm looking to take trades, what areas I'm looking to avoid trading in, and what I'm expecting for the day, right? In addition to publishing the charts on ES, NQ, and CL, which is crude. If anyone's interested in trying out that room for 7 days risk-free, simply send me an email to tradeandperform@gmail.com. I'll be more than happy to accommodate that. I hope everyone had a wonderful day. Trading can be fun, but you got to take the steps to learn how to do it properly. And you can make that money that you've been dreaming of. Okay, no one's in this to make a 10% return, but you've got to have a structured way of approaching it, and you've got to lift your outlook from doing it every single day to having a bigger picture of building a business, as Mark Cuban would say, scaling that business so that you can make a lot of money. I hope everyone has a great night. I've gone over my allotted time. Y'all, we'll see y'all in the morning. Good night, guys.